Ladies and gentlemen of the crypto space, we're live on a Monday, June 17th at 11:32 a.m. Nice hyperbole to open the stream, imagery of intergalactic federation. Whole point of this statement I've said over the years isn't for the hyperbole, it's for the emotionless, raw, base level observation of structure. What is a federation? A federation is an organization, a group of actors all engaging in similar activity focused around a central theme or a central actor. Probably that's the best point. You have this central infrastructure, centralized infrastructure that third-party participants are choosing to align themselves with. And there's strength in a federation. And the stronger the federation, the stronger the central actor. And the stronger the central actor, the stronger the third parties. It's a pretty simple equation. It's like not a conglomerate necessarily, but a group of corporations that are organized, or a group of countries that have partnerships or trade deals. It means there's a sense of collaboration. And that's a massive deal. And that's been my thesis for years at this point, regarding very few occurrences of this formation in these crypto markets. Now you have to park so much hyperbole and emotion and opinion at the door if you want to navigate these crypto markets well. The emotion gets in the way. The incessant greed, the incessant need to outperform, the never ending or the never boundable scale and scope of expectations. Everyone wants as much money as possible, but there has to be something more. There has to be some meaning in why we do what we do. So by making observations of structure and organization, it gives great meaning to wanting to participate. It's the same concept as wanting to join a particular team. What team do you want? These things are meaningful. And that's really where like the Z component comes in of X, Y, and Z. It's like, how long is this team going to exist for? And that's why we talk so much about immutability, because these teams are going to exist in perpetuity. What's the failure threshold for certain things, especially things that are immutable? There is no failure threshold. It's going to exist forever. Well, not forever, but it's going to be more resilient than almost anything else I could think of. A corporation with a balance sheet. Oh, shit. Sales are down. There goes the employees. There goes the R&D reinvestment. There goes the capacity to finance, blue collar and executive bonuses. There goes the attrition. So many things could lead to traditional organizations to fall apart. That is not the case in these crypto markets. So, in these crypto markets with immutability and determinism and no human resources, no debt, combined with, in many regards, an deterministic federation where protocols are actually designed to be dependent, existentially dependent on other protocols, that's crazy. That's crazy. Now, it's not the most important observation in these crypto markets, but it is an observation of something that has occurred in these crypto markets. And what I've done and what I talk about and encourage people to do is to find these types of occurrences occurrences, these types of structures, and these very fundamental characteristics to these businesses that give them meaning as compared to traditional organizations. And that meaning, as we've endlessly discussed, is quite extraordinary in comparison. Now, a lot of the protocols we talk about are not necessarily immutable. There's a lot of mutability. But in that regard, we size our positions accordingly, we measure our risk accordingly, and you have to take risk. So, all in all, everything we've talked about should construct a portfolio. And that portfolio has different size components where risk is measured, and risk is something that should be considered over time horizons. Now, a person with a 4, 8, 12-year time horizon is going to have very different risk considerations as compared to someone that has 50x leverage and a 30-minute time horizon. So that entire conversation between two such people is completely incompatible. They'll be using language that doesn't compute. It'd be like talking a foreign language. And the one will be frantic, looking at the chart, the 5-minute candles. And they have to take their leverage off, especially if they're on the wrong side of the trade. But when you have a 4, 8, 12-year time horizon, and you're dealing with concepts of immutability, determinism, XYZ, and you make observations about the structure of organization and collaboration, it's a whole nother ballgame. It's a whole different language. So charts look pretty interesting. Convex was down at $1.90 during the liquidation process, now pushing back up past 4 last night. The short liquidation pushed it up to 460-ish. And now it's pushing back into the $4 range, which is weekly 100 moving average. Symmetrical moving average is in play. And technicals are ever relevant in assessing directionality and pressure. And this is the right side. This is finally the right side of this moving average. And with clear rejections over the course of 3 weeks back in early 2024. But this was an unquestionable breach to the upside. So it's quite interesting because this indicates a change, or this is something that starts to change sentiment at the margins. It pushed through. Therefore, seller exhaustion is finally taking hold. Now, over what time period has this process taken? It isn't the last couple of weeks. It isn't the last couple of months. It isn't even the last year. It's the last 2 years. June of 2022. This entire process here, bottoming process. And this, what is a bottoming process? It's a process of seller exhaustion, of lower lows with lower breadth, which is basically the same thing as lower highs. And so if you invert this chart, it looks like it's going to roll over. I haven't inverted it, but I can see it right here. Very much looks like it's going to roll over, which means start to finally break out to the upside. More buyers taking over the market. It pushed through to the upside, which means we should see continued buy pressure into the moving average, much like the story that's told about a symmetric triangle. Not a symmetric triangle, like an ascending triangle, where if you hammer a wall enough, it finally breaks. And that is a similar sentiment that should be observed with a moving average and this type of positioning and price action into a particular moving average. Now, it's just the start. This process takes time, and it's the process of seller capitulation. Why sell if it's going to go higher? And then the whole narrative flips around. Now, this is 2 years in the making. And this is not necessarily dependent on too many external factors, given the size of the market, given the locale of the market. This is not a locale of any nation state. As we talk about these crypto markets, it's a market unto itself, outside the scope of any particular nation state. So this should be limited by very few external factors, especially considering lock rates, and because it's not necessarily 4 months lock. Convex is indeed a 4-month lock, but all the wrappers of convex are often in perpetuity. They relock deterministically. So this is certainly a process of seller exhaustion. This is certainly a capitulation to the downside with exogenous factors in play, which is liquidation, of course. So it's a very interesting period of price action that tells a story that's 2 years in the making. It's taken a long time to get here. Curve holding bottom barely, 31 cents. Big capitulation to the downside. Lots of locks, historic locks, as we've seen over the last couple of days. I don't pretend to have a crystal ball, but I tell the story as I structure my business operations. It will do what it's going to do, and we get to tell the story on 3 times a week about what the hell it's doing. Maybe it trends down. Maybe, but this is dependent on external factors. It's dependent on lock rates of federated protocols. It's dependent on capital inflows into these crypto markets. This is a defensive position for the price action, whereas this is not presenting the same way. This is a stronger technical position for price action, starting to push up against moving averages. This is a position of support, but where there isn't really any support. Maybe, if anything, there's a final level of support, basically the all-time low set back in 2020. Look forward. It's good to look forward to this story changing, but set your expectations as reasonable, because the story will tell itself however you want the story to play out. Hope that helps. Federations. Oh man, isn't that the biggest damn thing you've ever seen? Never seen anything like this in traditional markets. It's quite extraordinary. And no matter what person's sentiment is on social media, you need to define your own sentiment. You need to set your own expectations. You need to define your own business rules. And you alone could start doing that. And as these markets finally start to find bottom after a 2-year process, I find that more and more people finally start asking, what have you been doing for all these years? How have you survived? And where is all this revenue coming from? And I think that's going to be a big theme in the coming years, 4, 8, 12 years. We certainly didn't have it as well laid out for us in 20 and 21. People were frantic trying to figure out what the hell all this shit is. But going forward, it's a very different story for these crypto markets. There's much more structure, much more observation, and certainly respect for the businesses that have formed, and not just the memes. We don't need to be critical of the memes, but we can certainly say objectively that memes are not part of business structure. We can clearly state that they're part of culture and an expression of revolt, an expression of dissatisfaction, and a means for capital gain, so on and so forth, and whatever the hell you want to talk about with regard to memes. They're culturally significant. I like my NFTs. There's something very different about these businesses. The notion of banking, credit, foreign exchange, and that's a very powerful realization that takes a lot of peering through the bullshit of the crypto markets like, is actual business? Oh my. And we've been telling that story for a couple of years at this point, but certainly at some point, 2024, between now, 2028, 2032, the concept of business in crypto markets is going to be quite respected. And it's still early in that regard. It's still the space is still completely blanketed by the concept of degeneracy and gambling and speculation. But I show folks what I do with regard to credit, and it's not leverage for speculation. It can easily be used for credit for real world purchases. Now, I just came off a real world purchase, which was paid off. Then I used Aave for that because I'm in collateral building season, and I have very specific rules defined in my business operating procedures. And right now, this credit took about 14K. I wanted to buy some more exposure to Tapioca. I bought it down 128. Yeah, 128. 128, right there. This is probably more or less, or maybe this little one candle, because no. When I bought it, broke out. So I bought probably right about here, and then it broke to the upside. A couple of additional buys pushed it to the higher high. Right about here, maybe 128, 130, something like that. So this is in the spec revenue category because it doesn't generate revenue yet. It goes live on the 20th where we get to lock our TW tap. We're locked as TW tap. So it's sized accordingly. It's a relatively modest position to the overall portfolio, and it's respective of the debt load that I can carry. It is so imperative to not extend too much leverage. This amount of capital gets repaid in less than 1 month based on cash flow. So with a health factor of 5.43, it takes a significant destabilization of the world, because if Bitcoin and Ethereum destabilize to such an extent, it's really the world that's destabilizing. And in any case, this kind of debt can easily be repaid from collateral, not even a significant amount of collateral, half of the Ethereum collateral. So there's very little risk that is expressed here in this behavior. I price risk as something very expensive. That was a nice brief social media conversation last night. And I treat risk with a great deal of respect. I have little to no trust. Trust requires proof, and I certainly am not taking, I do not trust the greater economy. And there's almost nothing that can prove to me that the greater economy is relatively stable, which means there's always a great deal of risk to be respectful of. Health factors of 5 to 10 are probably where my comfort zone is currently. And I've said a couple of times over the last weeks that investment season is over. I mean, hey, look at Convex coming from $1.90, pushing into $4. So opportunistically, there's always investment season. I can broadly state that investment season is over, but you always have to be prepared to take advantage of market conditions if an opportunity arises. So that is what that cyclical behavior I described in that X post offers. If cash flow is building collateral you take on debt. How much debt can you take on? Be respectful of your cash flow. You should be able to pay off any debt in less than a month, in my opinion. At least that's what I define. And in that regard, you have a capacity to add to collateral, take on opportunistic investments with no long-term responsibility. 1 month or less to repay it off. That's the extent of your responsibility. And then you go back to normal operating procedures where cash flow goes to collateral and cash flow or debt can be taken as needed for payments, monthly payments, pay off your debt, add to collateral, and that's the process that my business will follow uh, at least into next year. This cycle hasn't even started. This capital expansion cycle hasn't even started. We've seen activity, meme activity, and broadly, the best description of DeFi, the businesses, are repricing from the downside, a mean regression to the norm. Haven't had the significant capital inflows yet. We haven't looked at DeFi Llama in quite a bit, and I'll look over this real quick before we get to the commentary. But from a volume perspective, whoa, look at this. Big volume perk week over week, 10%. I mean, look, 2022, the decline, sporadic spikes, but in 2024, volume's up meaningfully. Volume should be very, very, we'll see breakouts in volume, breakouts in stablecoin availability, currency supply. Let me see if I can mute this. Oh, damn it, I got notifications beeping left and right. Can I mute it? Mute. All right, anyway. So we'll see that in the data. 10% on the week is big volume differential. Let's go over to stables and look at all marginally positive sum. Things have leveled off, which is a sense of what we are experiencing in these crypto markets. Activity has calmed down, and the exuberance on social media has calmed down. And look, since April, stablecoin growth has slowed, still marginally positive, 0.21% over the week. But that is a big difference from bottom in 2023. It looks like Q3, heading into Q4 2023. We'll look back in hindsight and we'll see this as bottom. We'll see this as summer lull 2024. Plenty of reasons that 2024 summer can be DeFi summer 2020. It's possible, but we could easily look back and see this is the summer lull of 2024. We'll only know that in hindsight, and that just would be a statement observing that we are leveling off from the growth trend line. Because as you can see, if the growth trend line continued, it would be at like 161 billion, 161. No, that'd be 180. I'm not looking at the y-axis. We'd be at like 100 take if the trend line continued. So very interesting to see, get a sense of where we are, and we would look to macroeconomic conditions to get a sense of when that trend line can be reclaimed, or when the next expansion could start to occur again. But I don't necessarily think we're going to look into macro right about now. How do I mute? I can close it. Yeah, I don't. Okay, let's look at volume on popular L2s. We'll look at Arbitrum. Camelot and Ramsey's going back and forth. Big lull in Ramsey's activity, especially buy pressure, completely evaporated, almost a full mean regression. Certainly in the sexy zone, well back into the top of it. If we go back on the fib retrace, so zoom out the fib retrace, zoom out the sexy zone. Now, sentiment is wavering. That is unambiguous. That's expressed clearly in the price point. Now, for myself, I must be respectful of that, and that is separate and apart from ownership of the position. The position is not something that I can liquidate, and it does offer its expansion on scroll with Nuri, and I expect expansion similar to what Velodrome's doing, obviously with uh, a fork of sorts, rather than Velodrome opting for the consolidated expansion approach. And I think that is interesting. From an opportunity standpoint, this is not something I would consider taking additional exposure to. Am I content with current exposure? Yes. I still have that kindling that it was a good choice. Still quite productive. How are we on this week's productivity? Should be about 300, hopefully. 315. That is decent. That is along the lines of my expectations. Is about $14,000 a year. I mean, it's a massive number, $14,000 a year, and the position is a $20,000 position. That's what 75% APR. That's extraordinary in traditional financial terms. So certainly meeting expectations from a cash flow perspective. So if that cash flow continues back down to entry price of about 1.8 cents, well, that's interesting. Now, I don't want to see it fall below the sexy zone. That is starting to head into narrative and validation territory. Note that I don't even have the Clio chart up currently. The narrative that I think of when I took the position has clearly been invalidated. To take a look just so I could cringe along with everyone. $21. Oh, goodness. There's just no volume, no activity. It's not meeting expectations in any regard, and my expectations are boring AF. This is just a painful grind into the nether zone of is Mantle even a meaningful chain at all? Stable adoption or stable coin growth on the chain is non-existent, and volume on the chain is just evaporating into nothingness. If we go back to Nile is still living up to decent expectations, still well above sexy zone, still well in above entry price territory, still quite productive as well. This was also a $20,000 position. And let's see if it's up at $300. Hopefully, let's see, 280, 290. Okay, right about now. So this will end the week probably at around $350, $400. And that is over 75% APR. So relative to basis, revenue at 75+% APR is insane in traditional financial terms. So this narrative still exists. Clearly, for a narrative to continue to exist, it needs to find support and needs to find capital inflow. Otherwise, it's heading down the road of where the nether regions that Clio is heading down, unfortunately. Let's go back to Defi Llama. We can take a look at Linnea. Floundering, drying out. And that is what it is. -4% on the week. And I don't even want to look at that though. It's just off the radar. Oh, good. Hard. Okay, so that's the whole point, and that's or a very big point that I can express to you folks. With my treatment of this market with regard to collateral accumulation and debt, you take on a position relative to your cash flow and the debt that you can take, and you want to pay that debt in less than a month, and which means you're using debt to buy investments opportunistically. Clio is thus far not living up to expectations. It's a failure of an investment. And it's okay for your investments to not succeed. What matters is that the investment part is separate and apart from the sustainability of the core business process. Clio's long paid off. Nuri's long paid off. Ramsey's is long paid off. All of it's paid off. And we're on to new things. What you do is you clear the books. Once the investments are paid off, You could contemplate new investments, you add to new collateral, and you have cash for expenses. And if there's no opportunity to invest, you don't invest, and you add the collateral. So these are, if you need to write down these types of rules for yourself, write them down. I've written them down into very rigorous operating procedures, and I would very much encourage folks to do the same. In fact, I often say on social media nowadays, that's probably more important than investing. Now, I'm obviously saying that in hindsight because one, I've been in these markets for years. I'm an old veteran. And two, I've also written the procedures, written my rules down in concrete, documented form. So it's all in hindsight at this point. So I definitely encourage that kind of behavior, structured approach to engaging with these crypto markets, which is clearly a very contrarian approach. So much of these crypto markets is just, ooh, you're going to do whatever you're going to do. And then you look back and you're like, I don't even know what I did. But being able to document what you do, why you do it, how you do it, and in operating procedure form, really adds to the stability of your capacity to continue to engage with these markets sustainably. Hope that helps. Potatoes in the house. Shish, good morning. Hope you had a nice Father's Day. Definitely a nice weekend. Love my family. Kazika, greetings. Cap, Samuel, good morning. Diego, audio is not the best. What am I going to do? I'm sure you guys still hear me. I'm no professional recorder, and I got my daughter's pictures behind me. This is definitely an amateur studio presentation. Tapsy, hey, what's up, Brian? Happy Monday. Is the only reason you don't like Prisma because of the hard liquidation? Can you look at its viability as a business? I look for reasons to invalidate exposure or investing. There's way too much to invest in. I still don't have an FFN exposure, and it's a very clear XYZ type of investment, and I'll probably get to it at some point. We'll see if the price is still investable. Market cap surely is, but Prisma, I don't like hard liquidations. I'm not too, so credit's a big deal. It's clearly a credit business. Liquidity V1, it's a failure in most regards. A success with regard to immutability. A success in that it has led or will lead to V2. I do like the amount of effort that's put into Prisma. I like the bifurcation of stable versus volatile. I like the economics applied on top. I assume it's disinflationary. As long as it's disinflationary, it's reasonable. I like the gauge voting. I mean, it's really well rounded. But man, that hard liquidation model is just not reasonable anymore, considering two protocols at this point. What is it? It's I keep forgetting. There's three protocols in these crypto markets that do soft liquidations. Clearly, CRVUSD, now Tapioca, and I forget the name of it. Liquid. No. Oh my God, it's a big protocol with a lot of deposits. Instadia. But that's it. But what's that exchange they built? Fluid. Fluid does soft liquidations, to my understanding as well. So this is the third protocol, and it's got big deposits. This is something on the radar, something to always consider. Got to consider obviously X, Y, and Z. INSD. INST. It's the DF. Which one has the volume? 7 mil liquidity. There you go. Here's where you are with regard to InstaDF in the fluid protocol. Looks about Frax-esque in some regards in this positioning right now. And just directionality is bleak. This is maybe back to bottom. Where is bottom? Bottom hunting season. That looks like that's surely a position of defensiveness, a position of support, which is an expression of weakness. And I would have to review what kind of cash flow is offered. I'd rather consider. I look for reasons to invalidate investing. You can't own anything. So in this regard, it's the DApp that's off the radar right now. Certainly Prisma is off the radar because there's much more interesting things, and there's only X amount of capital to work with. You have to work within your budget, your investing budget. And in that regard, this debt is for Tapioca. I get a little bit from the Pearl Club NFT, and we get to lock on the 20th, and this warrants the exposure based on my inspection because of the just insane robustness of the protocol, even though it's spec revenue. It doesn't fall into the XYZ analysis. But this will be done, and my exposure is paid for, and it will be paid off in short order, and then I move on to back to the same process, rinse, repeat over and over again. And that's and then this business operation that I do is very mechanical, and it's like you find yourself in different modes, and the mode right now is I took exposure, I pay off the debt, and then I go back to considering options and choices based on business rules. Very mechanical, and that's very comforting, and I hope folks are able to find the same degree of comfort that I express. It's refreshing because I myself am so comfortable right now talking to you right now. I was not comfortable, and it was done only a couple of years ago. It was very frantic back in 2020 and 2021, but it doesn't need to be that way. It doesn't. I remember in 2022, I remember saying to folks on Discord, because we still had Discord back then, and we definitely did this stream back then, that it was going to be a different game next cycle. And clearly, the way I'm talking to you right now, that different game should be obvious. And there's no frantic. Things are going to be going parabolic at some point. Everyone will be insane with the meme super cycle, or some country will put their damn balance sheet in Bitcoin. But the operating procedures are immutable. There's a reason I wrote my operating procedures the way I did. And then they won't change. Technically, they are immutable, but I'm relatively rigid in the sense that I wrote them the way I did because they're good, and then they're going to bring me a great deal of comfort when exuberance is pervasive in the market once again. Hope that helps, Shishk. Clearly a digression, which I'm well known for. Gazika, there is some echo. Mike is KO. Oh, let me see if. All right, now folks are. I'm probably late. That was 11:30. That was over a half an hour ago. That's unfortunate. Audio. Maybe that'll help. Default Chris Barracuda. Maybe I swapped to my other headset for Wednesday. Anyway, I do the best I can. No, it's not computer mic. Camera, audio. I mean, it should be good. It should be good. It's the best it's going to be. Okay, we keep going. I hope you're doing well, Dantes. I saw some of your USDO tweets. Any cool thoughts that you have been bouncing around about it? It's a big deal. Dollars are the biggest product of these crypto markets. So that's why story time. So that's why most people don't understand cryptos, because they don't understand money and they don't understand the dollar. The dollar is a product. The biggest export of the United States in so many regards is arguably the dollar, especially as we've hollowed out our manufacturing infrastructure and exported it for global to reap the benefits of globalization. But that's over. That's another story. But the dollar is a product. Now, most dollars as a product have been produced internationally over the last 50 years in what's traditionally called the Eurodollar market. So we've seen new versions of the dollar in these crypto markets, clearly even DAI and CRVUSD and USDC, USDT, and MIM and MI, and pick how many dollars are there. But I mentioned the ones I just did because they're the ones I'm interested in, and thus far have been the most successful and sustainable dollars. And USDO is the new dollar from Tapioca, which is not even live yet. So we'll know in a couple of days. We'll see how much demand there is for their dollar product, and I'm certainly interested in what that demand is, and I hope it's a nice cash flow. Look forward to paying off uh, that investment, which will happen, and we'll go back to normal business operating procedures. Raul, James, Teddy, a congressman just bought Velo. Yes, he did. I saw that post. It's a big world. And if that's an expression of a congressman's interest, what do you think's going on around the world? Because there's only one velodrome. So the potential for capital concentration in these crypto businesses is extraordinary because it's not something that people are accustomed to in traditional finance. The amount of accounts and KYC and verification and validation and banking rails, and so on and so forth, required to move capital from the banking infrastructure from one country to another is quite extraordinary compared to what can be done in these crypto markets. There's so much less friction. Capital flows so much more freely. And once you get capital into these crypto markets, this market is the same market in the United States as it is in Canada, South America, Africa, Asia, Europe, land down under, so on and so forth. Velo is Velo, no matter what country you're in. That's crazy reality. It really does change the entire investment equation. Absolutely love your insights and the way you teach. I have a quick question regarding CDX since the sellers are so exhausted. Maybe good time to look at Cleve bottom as well. Gaming Larry, you're absolutely right. A lot of Dow is something that is meaningful. They are strong, smart, nimble, and they iterate quick. Cleve has a tremendous amount of convex voting rights, um, which is off the radar in the crypto markets. Voting and business and right curve investing is not popular in crypto right now. It's very left curve. Still remains left curve season. You'll know when it's right curve season when the businesses start to go asymmetric and parabolic and people start to jump on rocket ships with their little astronaut characters and we get the memes and everything's going to the moon. It's everything is cyclical. That will come. Everything will go right curve. Voting rights will be meaningful. Dollar liquidity depth will go parabolic. All of this is just the nature of the universe. And the nature is of everything is cyclicality. So all of that is yet to come. And then it goes up, and then it goes down, and it goes down. It repeats over and over again, which is why the guiding rule for all of us needs to be all of it is noise. So what matters really is the process and what can be documented as the procedures of how to manage things. That's probably much more important, or at least of equal importance, to the actual investment process. Hope that helps. Well, Max, audio is clearly screwed. Maybe Rep Mike Collins watched the captain stream. Maybe. Connect the dots. Hello, Captain. I think you mentioned purchasing Ramsey's NFT at a discount the other stream. Where could one do that? What is it? What the heck is the name of that? I forget the name of the. Someone throw it in here. If Arrow's on, he's a fan of that site that has all the aftermarket NFTs. It slips my mind. I'm sure anyone in the comments could post that as well. I forget the name of the website, but yeah, there's an aftermarket place to acquire discounted locked VE NFTs. Athletic concept. Hey Cap, what is Tapioca and how did the LBP airdrop work? Worked out well. Everything about Tapioca is about acquiring protocol owned liquidity. So the LPP was a raise, the options airdrops all acquire more protocol owned liquidity. Every emission from Tapioca is an option, which means it's all a capital raise. And everything about Tapioca is immutable. So protocol liquidity becomes immutably part of the construct. Uh, it's just basically a POL up only mechanism. Oh, toast, check. Noah, check. 1, 2. Ah, damn it. I'm such an amateur. Toast. Yeah, it looks like it's working again. All right, someone scream at me if these headphones aren't working. I probably should have switched earlier. I think the battery was dying on the other headphones, and I bet now everyone says the audio is great. All right, is what it is. So Tapioca's not even launched yet. So it's early. Be respectful of that reality. Um, but I'm fond of immutability. I'm fond of the protocol and liquidity mechanism they've developed and deployed, and fond of dollars as a business. They have an entire built-in credit market. Oh, they just hit all. They literally just hit everything that I think is meaningful with these crypto markets. So that's what's going on with Tapioca. Stablecoin, credit market. Oh my God. So don't don't take my excitement about it as something more than it is. It wasn't launched. We don't know what it will do. And we're clearly looking at the price action coming off an options airdrop. 10 hours left in this phase, and then you still got the Pearl Club to exercise their options. And we don't know. I took my position, as I said, probably around here, buck 28, buck 30. Not bottom. I can't buy bottom. I'm not smart enough or fast enough to buy bottom anyway. Low liquidity on Tapioca. Did you just accept those slippages at that price of doing business? Yeah. My sentiment is I want to buy a target amount of coins. I think I took like a 1.8% slippage hit when I took that position. I think I bought 10,000. Hmm. Yeah, I bought 10,000 for, and I have $14,000 worth of debt. That sounds about right. John, where are you thinking? Where is your thinking at with respect to Bitcoin price action? So we've been hovering at all-time high for months at this point. When you want to understand Bitcoin price action, You can't look at Bitcoin. Moves at 100. This is a very interesting spot. It's a position of support. As much as this is technicals on a volatility indicator, a position of support is a position of weakness. And what is move? Move is a manifestation of geopolitical collusion and a capacity to reduce the volatility in the global collateral market. Now, funnily enough, we're talking about global collateral here. It's the same thing that I do with Aave. This is exactly the same business that the relatively much wealthier folks do. You have collateral and you borrow against it, your cash flow pays the collateral, and you buy more collateral. It's just the way the world works. So when volatility is high, people are borrowing less because they don't know if their collateral is going to depreciate. For Bitcoin and Ethereum, collateral were high in volatility, and I was going from 5 and I was afraid it was going to drop to 3. I'm not going to borrow as much. But if Bitcoin's at 70 grand for 6 months, yeah, maybe I'll drop it down to 3 as a health factor because it's low volatility. That's basically the way the world operates with regard to this chart and collateral volatility. When volatility is low for a period of time, that's when the currency expansion cycle starts. It hasn't even started yet. This is a mean regression, literally by definition, to the weekly 200. And if you really want to zoom out, monthly 50, and you really want to go to 3 month, mean regression to the time weighted average price or time weighted average volatility value. And this is interesting. 11 days for the 3 month close. Actually, this is quite constructive on the 3 month. Breach of the time weighted average on the 3 month, and then a retest and a rejection. So if this was a price action chart, this is quite constructive. So what you want is in Q3 to see a lower low, or you want to see confluence suggesting that this was a rejection to the upside and they've actually finally gained control over collateral volatility. And then heading into, if Q3 holds, we could see strength in Q3. And then you want to see the lower low heading into the end of the year, Q4. Maybe a push towards fresh lows through the 50 SMA in the 3 month down to the 70s, and that's where just everything starts to get weird. You see this move indicator roll down here, or the DXY roll over below 100, which is literally the 3 month time weighted average price. That's when you get the confluence of stuff getting weird. Things start to get absolutely parabolic. Hope that helps. That's where we are with Bitcoin. HG, so why the investment period is over, but the market expansion has not started? Well, it's dependent on price action and levels, and price is always through historic price points for an asset. So, and it's also about capital availability. We've been buying stuff, as I tell you on the stream, for the last 2 years, accumulating cash flow using XYZ methodology. So you can't just buy because you have capital. You have to buy because either the technicals say there's an opportunity, something is discounted, or XYZ is a no-brainer. If you can buy 40% APR, that's a big cash flow. That's big cash flow. But you don't want to overconcentrate. So if you have a bunch of 40% APR curve, why are you gonna buy more? It's just paying the same amount of basis. Just paying. So you want to also have diversification. So you can't just invest. You have to have rules with regard to investing and restraint to not necessarily invest because the overall holistic construct of the portfolio is meaningful. So for me, investment season is broadly over unless there's an outsized opportunity or something extraordinarily interesting. And I would like to accumulate more collateral right about now. And also enjoy the summer. So I'd like to pay off this debt. I'd like to have my collateral that I could take debt against and finance some things, upgrades maybe in the house, and vacation, and so on and so forth. And so there's other things to do other than invest with the cash flow. Hope that helps. HG, especially when Curve all time low, I own Curve. It's one of my core portfolio components. I don't need to add more. I don't need to over concentrate or have excess of it. I have more than enough of it. For my expectations of where Curve will be in the coming years, coming cycles for a 12-year time frame, I have exposure. What is the difference between opportunistic buy and investment if the price is at a higher discount? And so these are things you'll have to define for yourself. So I tell you the story of how I define investing opportunistic versus maybe it's an investment season where everything's at a discount. So this is my definition, and it's subjective uh, in good part. My subjective choice of how I label a time period is based on a good amount of objective data of where we are in the cycle, so on and so forth, looking at the dollar, looking at the move indicator. But it's also just an opinion. So what matters is consistency. So define these time periods, define your modes of operation, and try and be consistent. And that's critical for any structured business. And what you want to do is you want to structure this engagement with these crypto markets as a rigorous, well-defined business activity. Hope that helps. No horns, no tail. Good point, HG. That's right. Killis, good morning. How are you? Hope everything's well. Veteran, Killis has been with us for years. Hope you had a great Father's Day. I appreciate that very much. Jake Robinson, the audio issue may be coming. Yes, indeed, cable coming loose. I run Bluetooth and 2.4 gigahertz adapters. Maybe my headphone battery was just dying, which it was, and it actually died. DA Advisor, maybe an amateur studio, yet still the biggest pro and best show in town. Thank you, Cap. Mention you on Leviathan news stream today. I got to get myself on there. I got to find some time. I will, my friend. Always a pleasure. Thank you. When we discussed the value investing mindset, it's so easy to want to join the crypto market as a young person and want to be rich. It's so vague. It's so unspecified. It's so unrigorous in execution. There's no, this hope is not a sustainable methodology. Business is best served rigorously defined. And that is the only thing that brings comfort. And that is the only thing that brings calm, cool, and collectedness in a market that is grossly misunderstood. My man, I appreciate you, DA advisor. Um, Jake, which congressman? I don't remember his name, but maybe Teddy will respond. Given the curve drop related to the liquidation, you're still optimistic about the project, of course, with Lockheed Curve. It's hell or high water. So my investments are purchases. I, in accounting books, assign a $0 fair market value. I have anything I purchase, I am prohibited to liquidate. I cannot sell these. They're a purchase. And that produces not only an optimal business structure, that produces an optimal accounting and reporting structure. Um, so that brings me a great deal of comfort. As I just said, well-structured business should bring you comfort. It's irrelevant. Price action is irrelevant. If Curve dwindled in price and revenue and cash flow, I would be disappointed. Much like I described Clio. The revenue's not there. The chart, technical chart's horrible. But literally, the title of the stream is the Federation. So Curve is probably the most exciting component of the portfolio. It has an enormous federation. think of all the protocols that are existentially dependent on it. It has the greatest chance of achieving what I want to achieve for my business. Or better said, what I want to achieve with my business is probably best expressed or has the best potential with Curve being a component of what I own. It's my sentiment about Curve. Michael got liquidated. Plenty of things could have been done differently. It's still cranking out 40% APR. It's a crazy amount of revenue that has been consistent for years. So when these markets turn exuberant, that revenue goes up. When there's doldrums in these markets, that revenue goes down. Up, down, revenue. And to buy revenue, then you could do something similar to what I most recently have been doing with collateral. I spent a lot of collateral over the last 2 years to buy cash flow. With that cash flow, I'm able to buy collateral. And with that collateral, I'm able to take on debt. And with that collateral, with that cash flow, I'm able to pay off debt. And with that debt, I'm able to invest to buy more cash flow. And with debt to pay bills. And that cycle continues, growing more collateral, debt, more investments, more cash flow pays off debt, invests, buys collateral. Notice the hand gesture. I'm like Gary Gensler when he was here. I might as well do the gesture so everyone could meme it or something. More collateral, more cash flow, more debt. I literally that was the hand gesture that Gary Gensler was doing. Oh dear Lord, incredible. Hope that helps. Second set Maze, my man. Question: if ETH is cash, why not use it for your purchase instead of using it for collateral? Because it has degrees of moneyness and it can be collateralized. You're not going to take on debt on USDC or USDT as collateral. ETH obviously uh, is speculated, rightfully so, to appreciate over the next 4, 8, and 12 years. So logically, it's something you want to accumulate and use as collateral rather than for settlement purposes. Now, clearly, I can use it for settlement purposes, and if cash flow is disrupted or things don't play out as I expect from my business standpoint, I can pay off my debt using the collateral. So it is a cash instrument that has properties of collateral. You could use it to settle transactions, meaning you could use it to buy investments or pay bills. So it has properties of currency and properties of collateral. So it's a multi-purpose cash instrument, and that's meaningful. There'll be a time where this story will change towards heading into 2026, where the composition of your cash should be adjusted, and you need to respect FX markets. And we're early to start talking about that story, but the composition of this will be very different heading into 2026. At some point, anything that can be sold must be sold. You know that story. We'll tell that story again. You know it. Adam, are you aware of any budding Federation participants for Tapioca? No, it's too early. We know nothing at this point. But that's the biggest inspection or the biggest thing to come of these damn crypto markets, the emergence of a federation where third parties are literally saying, I want in. I want to support you. I want this to grow. I want this to work. That's crazy. The emergence of a federation, we don't see that often in traditional finance. We don't see that often amongst nation states. Um, but what else is a federation in these crypto markets? What else? Where else have we seen third parties join an organization, join the cause to achieve a collective effort? It's pretty crazy stuff. Does POL mean with TAP we might not even need recyclers? Well, I think technically that's V33s as well. So V33s are in some regards a self-contained federation. Now bear in mind V33s are brand new. They haven't endured a cycle. So curve clearly is 2020. So it has endured 2022 and attack left and right, be it intentional attack or indirect. Michael's liquidation was an indirect attack on UWU, which basically caused conditions that triggered full-on liquidation cascade. Um, so we need to see more time for V33s. So in my opinion, it took me a long time to decide to take exposure. And I think exposure to the V33 started with Ramsey's at 1.8 cents. And then I said, all right, Nile. And then my mistake with Clio. And I didn't really think enough about Mantle. And it's not every investment is going to be successful. And happy with the Velodrome exposure because of its expression of exposure to various markets. It's going across the super chain. And I just, Aerodrome, I cannot justify. It's too isolated of a market. And maybe I rank curve it too much, but base is just base. Base is just an optimistic super chain. And there's plenty of them. And there's plenty of reasons for many chains to do well. And I probably should have thought the same way I think about base and aerodrome, the way I did about Clio, and I shouldn't have taken exposure. Albeit base and Mantle are literally apples and oranges, but still, that should have been the way or a conclusion I came to. It's an isolated exposure to an isolated chain. Completely different narratives for the chains, but it is much superior to buy one thing and have exposure to many things. And that's literally what Velodrome is. You buy it, and it offers exposure to oh so much stuff. And it's literally as growing. It's going to be a growing list, and that's very interesting. Uh, buy one thing exposed to how many things, and ever growing expansion of things. And that's big. So that's kind of what I thought about Ramsey's, and that is still expected. I expect Nuri exposure because of Ramsey's, and I expect that to continue because I would expect they want to grow and expand, and so that's interesting. I think Nile will be isolated, but then again, uh, Linnea and the consensus narrative is quite interesting. It's consensus. That's crazy and interesting. Uh, so there's still a kindle of hope there and reasonable expectations. So certainly much more reasonable expectations as compared to Mantle, which looks like it's just completely rolling over. Um, for aftermarket V NFTs, I don't know, so someone will pop that URL or I'll remind me next time. I'll see if I can find it. Toast received, potato. Tapioca is crazy. I love listening to Matt ramble on his Discord. Yeah, right. Heck of a development. They really built something incredible if everything just goes smoothly and flawlessly. Such a rigorous execution. So many things you could do with it that is kind of crazy. Yeah, I think crazy is a decently applicable. Hi all, best lessons by Cat. Pay attention. Anna said thank you very much. Rupert's in the house. Much a pleasure. Stay rational. Thanks for the stream, Cat. Fugu, always a pleasure. Adam, 1% to 10% changes everything, right? Remember that good old rule of thumb? Typically limit myself to 3%, but when the investment in question is Tapioca and price is less than LBP, is there ever a time to bend the rule? There's always a time to bend the rule. Rules are subjective. You want to adjust accordingly. You want to be reasonable. And ultimately, you want to be rational. Hey, Cap, what star sign are you? What is it, the year of month of birth? I don't know. Pisces. Pisces. I don't know what that means. John, you're missing the massive amount of L3s that are being built. Yeah, conduit. Yeah, I'll go here. This shit is crazy. Conduit is crazy. Yeah, it's a big deal. Not to mention direct integration of Airdrome into the Coinbase wallet. I don't, it doesn't interest me much, and that's okay. I'm happy folks get excited about those things. But this is what's interesting to me for scale and scope of exposure. Uh, Base is just as meaningful as optimism is just as meaningful as Arbitrum, and this is crazy. L3s, and then that this is where I don't have a full sense of where the future's heading, but this concept right here is pretty wild. And you just roll a meta chain on top of Arbitrum Orbit and an optimistic superchain, and you could DA on the cheapest network, DA on Celestia, and settle on mainnet, settle on base, settle where this is just an absolutely wild glimpse of where the hell things are heading. I believe this was the Gen chain, and they were one of the first. So quite fascinating where things are heading. John, yeah, definitely not missing it. It's just X, Y, and Z. I don't have enough capital to buy the position size I want. And ultimately, the position, no matter what I buy, it's going to produce Y revenue. And how much 80% revenue can you have? So, what's the point of excess diversification? Might as well concentrate into something else that I have that produces the same exact 80% revenue. So, that's the most important thing to remember about a business and APR. APR is APR is APR. You buy real estate and it's at 12%. Oh, or if you buy SDI or SFRAX at 12%, 12%, 12% is 12% is 12%, 20%, 40% is 40% is 40%. I mean, if you're buying something at 40% and 40% is 40% is 40%, you got to remember that it's also on basis. So price action will drive you nuts. Cards cranking out 40% APR. Appreciated off 25 cents at 25 cents. It was at 47% APR. So you got to remember APR is inversely proportional to price point, but APR relative to basis is all that matters. So that's why I said earlier, like APR on basis here is 75%. It's about 75% as well on Nile as well, and Velodrome as well. I got my Velodrome exposure, which is anywhere between to 55% over the last weeks, months at this point. So these are lovely numbers. So what's the point of excess diversification? 40% is 40%. Hope that helps. Why do you use SMAs instead of normal MAs? I have them up as well. I guess even my MA ribbon is SMAs. I don't know. I like the time weighted average price the most. Time weighted average price. You can also use the volume weighted average price. But it's funny how they're all very similar and they all express some sort of structural support and resistance. And it's pretty clear. If you go on the monthly, look, stopped out of resistance. Just above the time weighted average price. I don't even know. This is the MA ribbon. So divide 20, 20 on the monthly. Now, if you go into the weekly, it's the 100 on the weekly. So they're all basically very similar depending on the time frame that you're looking at. So the 20 on the monthly is basically the 100 on the weekly. Oh, there you go. That's clearly a level of resistance. Hope that helps. Well, only if you compound. Well, you can appreciate the concept of compounding. I also appreciate the concept of DCA. Don't get me wrong, simple concept, very meaningful. Very hard to tell the story of advanced capital management, structured capital management to uh, young folks, to my teenage cousins, or to sister-in-law, for example, who's interested in structuring things in a more sustainable way. This is complicated stuff. Basically, the stuff we talk about is not high school level capital management. I don't think the stuff we talk about is college level capital management. This is advanced, like industry grade shit. It's very structured stuff. Stuff we talk about on Discord with regard to contracts and private contracts and trust structures. This is graduate level type capital management, and probably even stuff that you don't learn in school, that you only do out in the real world with actual business experience. So, welcome to graduate school, ladies and gentlemen, because this is not your elementary education. Hope it helps. Much a pleasure to tell the story as often as I can. Monday, June 17th at 12:49 p.m. I thank you all for joining me today. 246 people made it to the end of the stream, and I'm pretty sure I just lost audio on my second device. Audio check. Yep. Pretty sure I just lost audio on my second device, so I'm going to wrap up the stream today before something falls over. Oh my God, I bet you this isn't even working. Anyway, thank you guys. Next time, peace.